Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the afternoon events for May 17th. Well, the UK CPI figures were a surprise. The market had expected inflation to slow, but not by as much as it did. Still, the fall in sterling didn't last long. It's now trading about where it was before the figure came out. That shows there's still demand for the currency as people close out their short positions. Now, the U.S. day starts with the housing starts and building permits for April. Both are expected to show a healthy rise from their March level. But what happens if one beats and the other misses? It's not clear. Sometimes your dollar moves up and sometimes it moves down. Bloomberg indicates that more people pay attention to starts than to the permits for what it's worth. In any event, the expectations are for relatively robust numbers from both, which would show that the hike in rates in December hasn't hurt this interest rate-sensitive sector. That would probably be positive for the dollar. Subsequently, U.S. industrial production is expected to rise in April and capacity utilization to move up a bit. Now, industrial production includes energy output, which is depressed by the decline in shale oil production. In that respect, the small rise expected for April is a decent outturn. The report may help to counter yesterday's unexpected drop in the Empire State Manufacturing Index, which would also be bullish for the dollar. Then, overnight, Japan will announce its first quarter GDP figure. Now, the Japanese GDP figures are notoriously unreliable and are quite likely to miss expectations, but unfortunately, we can't say which way they're likely to miss. On the one hand, domestic demand has been weak recently, and trade isn't growing very rapidly globally. So there's a good chance growth fell further. On the other hand, expectations aren't particularly high, particularly considering that GDP fell in the fourth quarter of 2015. And since the Japanese GDP figures don't adjust for the fact that it was a leap year, there could be an upside surprise. Now, if the figures do show a second consecutive quarter of contraction, in other words, a recession, that could add to pressure on the Bank of Japan to loosen policy further, which would be negative for the yen. On the other hand, it might cause the stock market to decline, which would tend to be positive for the yen. As the graph shows, sometimes, but not always, a weak GDP figure is correlated with a stronger yen. This is a difficult one to call. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.